Money Made Simple, Episode 9, Your Credit Score Explained. Introduction. Welcome back to Money Made Simple. Today, we are talking about your credit score, a 3-digit number that has an outsized influence on your financial life. It affects whether you can get a mortgage, what interest rate you pay on loans, whether you can rent a flat, and sometimes even whether you get a job. Chapter 1. What is a credit score? A credit score is a numerical summary of your creditworthiness, how likely you are to repay borrowed money based on your past behavior. In the United States, the most widely used score is the FICO score, ranging from 300 to 850. Above 700 is generally good. Above 800 is excellent. Below 600 is considered poor and will limit your borrowing options significantly. Chapter 2. What affects your score? 5 factors determine your FICO score. Payment history, 35%, is most important. Credit utilization, 30%, how much of your available credit you are using. Keep it below 30%, ideally below 10. Length of credit history, 15%. New credit applications, 10%. Credit mix, 10%. Paying every bill on time, every month, is the single biggest thing you can do. Chapter 3. How to check your score. In the United States, you are entitled to 1 free credit report per year from each of the 3 major bureaus through annualcreditreport.com. Many credit cards also provide free credit score monitoring. Checking your own score is a soft inquiry and does not affect your score. A lender checking it is a hard inquiry and can temporarily reduce it by a few points. Check annually for errors. They are more common than most people realize. Chapter 4. Common Score Killers. Missing payments, even by a few days, can significantly damage your score and stay on your report for 7 years. Set up automatic minimum payments on all accounts to prevent this. Maxing out credit cards, closing old accounts, applying for multiple credit products in a short period, and having accounts sent to collections are all major score reducers. Chapter 5. How to build and improve your score. If you have limited credit history, a secured credit card is one of the best ways to start. Use it for small regular purchases and pay the balance in full every month. If you have an existing score to improve, pay every bill on time without exception. Reduce credit card balances below 30% of the limit. Avoid applying for new credit unnecessarily. And keep old accounts open, even if rarely used. Improvements take 3 to 12 months of consistent behavior. Key quotes. Your credit score is a snapshot of your financial reliability. Money Made Simple. The most expensive thing you own is a bad credit score. Unknown. Credit is a system whereby a person who can't pay gets another person who can't pay to guarantee that he can pay. Charles Dickens. How to apply this. 1. Check your credit score this week using your bank, credit card provider, or a free service like Credit Karma. 2. Pull your full credit report and look for any errors or unrecognized accounts. 3. If your score is below 700, identify which factor is hurting it most: payment history, utilization, or something else, and focus there first. A note at the end. Your credit score is not a measure of your worth as a person. It is a data point about your financial history, and, like all data points, it can be changed. Consistent, boring financial behavior, pay on time, keep balances low, will build a strong score over time, and a strong score will save you serious money over a lifetime.